homework, let's pull up the template. Now, do you see on this template, I really did this template to try to make life easier. I think it confuses people, but do you see how I have your last name, first name?
Yep.
You click on that header and look what you can do. You just change it up. You can change it up. Change it up and you can put your own information on here, okay? And then just get out of the header. And close it. Now, we know it's not due September 8th. We're going to give us some extra leeway here, but an easy way to just, and the other reason I gave you this template is for some of it, you don't have to figure out what the wording is, what accounts. I'm trying to make, the goal here is to learn. So let's look at problem 2.1. Government-wide statements report on assets and liabilities that are denied recognition on fund statements. What the heck does that mean? What does that mean, they're denied recognition on fund statements? General fund, capital projects fund, special revenue funds, and debt service funds. We don't care about assets and long-term liabilities. We care about monies in, monies out. Current resources. That's our focus. We want to see that the monies that the government has been given, that they're utilized accordingly to how they're supposed to be handled. So Entrepreneur Consultants, a state agency, was established to provide consulting services to small businesses. It maintains only a single general fund and accounts for its activities on the modified accrual basis. What does modified accrual mean? Current resources. During its first month of operations, the association engaged in or was affected by the following transactions. So guys, it's basically a entity that is a state agency. So we're dealing with state and local government, and it sounds like they have a general fund, and that's it. They don't have all these unique various funds, just a general fund. So it received an unassigned grant of $100,000. Well,
Wouldn't that be a special, can you explain the template exactly how you?
how I'm working it?
Would that be a special
What we're
revenue
supposed to
fund?
do with, are we supposed to do it like a journal entry?
Yes, these are journal entries that I've already pretty much provided you with the
So
names.
you have the titles, we just need to plug in the numbers.
What about that A up there? That was one thing that was confusing me to get started, because there's no A on the 2.1, so it's like what?
Sweetheart, they're 2.1, you have the numbers 1, 2, 3, 4, 5, 6, 7.
But it says,
A says prepare journal entries in the general fund to record each of the transactions. Okay, so guys, number 1, Shantae, you asked why wouldn't this go into a special revenue fund?
Yeah, 'cause it's a grant.
Okay, but we remember how it said the only account fund it has is a single general fund.
Oh.
So it doesn't, it's going to let us know the type of funds, but in the case where there's only one fund, where's it gotta go, guys?
Cash.
In the general fund. So this is an easy problem because we know we're only dealing with a general fund. So guess where it's all gonna go? General fund.
your normal.
Guys, think of it like this. My husband and I have one checking account. Okay? And then I have a business checking account. And then we have a farm checking account. We have 3 checking accounts. So if I bring in money from the school, we put it in our general joint account to pay for expenses. If we sell a cow and we get $1,000 for selling a cow, where's that money probably going to go? Probably in the farm account because that's always in the hole anyway.
Well, can't the government just be like that?
But
Can't it just be?
but guys, what if we had a farm? And what if I really had a business, but all we have is one account? Where's the money going to go into?
The one account.
The one account. Because why?
It's the only place it can go.
That's the only place it can go. So they're telling us there's only one fund here. So where's the money have to go?
In the one fund.
In the one fund. So it tells us it received an unassigned grant of $100,000. Well, guys, we're going to debit cash for the general fund, and we're going to have $100,000 into cash. And what are we going to credit? $100,000. We're calling it revenues from grants. You can call it revenues from an unassigned grant. We can call it monies in from grants. I'm not worried about how you spell it out.
Thank you.
But what's important is cash is debited. If you go and credit cash for this account, this transaction, you are wrong, right?
Yep.
Next, it purchased 5 computers at $2,000 each.
So $10,000.
$10,000 will be debited to expenditures computers. Now, do you notice it doesn't say supplies expense, or it's not computer as an asset, fixed asset? Why are we calling it expenditures computers?
Because it's the modified basis.
This is the modified basis of accounting, and we care about expenditures. We don't use the word expense in a modified basis of accounting fund statement. We use expenditures. We care about how the money's going. $10,000 expenditures, computers. Now, guys, when we go and work on a government-wide financial statement, we will take these computers and show them as fixed assets. But for purposes of this general fund, do we care? No, we don't care they're a fixed asset. We care it's an expenditure. It's money out. Next, it paid wages and salaries of $6,000. What are we doing? Expenditure, wages, cash. Okay, where would you go wrong? If you had this transaction and you debited cash for $6,000 and credited expenditures, wages,
Your employees are paying, you know.
you're not going to get that one right, okay? But in this case, expenditures are a debit, and we're crediting cash because cash is leaving us. The normal balance for a cash account is what? A debit balance. What happens when we use cash? We credit it. Next, it borrowed $24,000 from a bank to enable it to purchase an automobile. It gave the bank a long-term note. What are we doing?
We're receiving
Cash we're receiving for $24,000. So $24,000 cash is a debit. And what are we doing?
We're buying an automobile.
We are buying an automobile, but in this transaction, we're showing the money came in.
Yeah.
Do we show a long-term liability bank loan? No. We're showing proceeds from borrowing of $24,000. Again, our goal is to provide information regarding our current resources. We're receiving money because we borrowed money. We're not showing liability, we're showing proceeds from borrowing. Now, it purchased the automobile for $24,000. What are we going to do here?
Automobile expenditure.
Expenditure automobile, are we going to show fixed asset? $24,000 for an asset? No. We're showing an expenditure of $24,000 and cash of $24,000. Got it? It made its first payment on the note, interest of $200. Do we have an interest expense?
No.
No. We have an expenditure. For how much? 200. Cash. 200 credit. Next, number 7. It destroyed one of its computers in an accident. The computer was not insured. Have we spent any current resources?
No.
No. Now, what would happen in the accrual basis?
You'd have to take it off your book.
We would want to take that off our books and we would show a loss, wouldn't we? Or whatever it is, generally a loss. But in this case, we're not expending any resources, are we? So we're not going to do anything about that. Okay?
So this is actually much simpler.
Right-
We're
right
not
now
making
it is-
too hard.
I think that might be it, guys.
Basically, this is just like your checkbook. You just take
Yes
money
and-
out,
yes
add
and
money,
no.
Take money out.
For
Yes
the
and-
general fund, yes.
Yes and no, though. We'll get on that. In chapter 3, you'll notice that we are going to have some receivables, but they're going to be receivables that are going to come, we're going to receive within 60 days of year end. We don't care about long-term receivables, or we might have some payables here. So it's kind of a cash, it's a modified accrual basis, okay?